Hello, chart watchers, and welcome to this Friday, March 9th, Market Watchers Live. Hard to believe we got another week in. This is with your host, Tom Boley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for those of you who are our regulars, welcome back. I do want to go ahead and get us into the latest what's going on in the market, so bear with me one second. And you can see we got the Dow Jones Industrial Average up 275 points. Lots going on today in terms of the jobs reports, the 10-year Treasury yield. We're getting some breakouts, a lot of things to talk about. But you can see the Dow Jones up 275, the S&P 500 up 30, getting close to that reaction high that we saw at the end of February. But take a look at the Nasdaq breaking out to an all-time high, clearing the late January high, that 10% correction. Unless we get a reversal this afternoon, that 10% correction on the Nasdaq is behind us as we set new highs. The Russell 2000 also showing extreme outperformance once again relative to the larger cap indices. So Russell 2000 strengthening there. 10-year Treasury yield up 1%. Which is about 3 basis points, back up near 2.90%. Again, a lot of that has to do with the solid jobs report. We'll talk about that in just a couple minutes. The Volatility Index, on an intraday basis, didn't get that low. It's actually got down to low 15s, but it is sitting at 1540 right now. And of note, last two bear markets, we never saw the VIX go below 16. So I do think that that is a further bullish signal that perhaps the worst is behind us. The XLE leading, or one of the leading groups today in terms of industries, up 1.64%. Financials and industrials, which have been very strong throughout much of the move since November of 2016, they are among the leaders again today. XLF, you can see up 1.66%, and the XLI up 1.5%. Within consumer discretionary, I think it's worth noting that the hotels group has broken its triangle. It had a symmetrical triangle. If you connect the highs and then connect those rising lows, we are breaking out of that triangle. We're seeing a lot of that. The electrical components in the technology space, you can see also a triangle break. This is a group that's been leading technology today. And then asset managers also making that triangle break with this push to the upside. So a lot of good stuff happening technically. Again, solid jobs report, which we'll talk about in a couple minutes. But first, let me bring in my co-host, Aaron. Happy Friday, Aaron. How are you doing?
I'm doing quite well. It is Friday, so that's an excellent thing. And we've had, wow, quite a week. Hey, Tom, can you make sure to expand your screen there so we can make all those charts really big? But yeah, great week, right? I mean, we had Tushar, we had Martin Pring, Greg Schnell, and now it's just you and me. So great show. But I did want to mention too, we did the poll. Tushar Chande had asked us to run a poll yesterday, and it was about whether we're going to see a double bottom. And it was really interesting because everybody was basically mixed. It ended 52% yes and 48% no. But when we finished the program yesterday, it was actually 50-50. So a lot of indecision, and I'm going to talk a lot about that in sentiment.
Awesome. Well, we got a ton to go over today. Of course, we've got the workshop and all. I'm going to let you get into all of that here in just a couple of seconds. We do have the announcements for next week. So Aaron will get into that. We'll go through the agenda, and then we'll get everything started.
All right. Well, you thought we had a great week this week. Look at what we have coming up this coming week. First of all, we have everything stock charts. I'm not sure exactly who's coming in for that, but I'm sure we're going to find some new tips and tricks. Greg Morris is going to be here on Wednesday, Dancing with the Trend, the author of Dancing with the Trend. Julius is back, the Mr. RRG, so he will be there. And then finally, I'm going to be doing a workshop on next Friday. I am going to start taking some suggestions. I came up with analysis paralysis last time because it was a suggestion in our survey responses, but feel free to suggest anything in the chat room or in the survey at the end of the show. And with that, let's see, we've got the schedule for the day, though. It is packed, mainly because you're taking up a good portion of this morning talking about establishing a strong earnings chart list. This is something I know you do all the time. and talk about, and everybody wanted to know how to do it themselves. So we're going to learn all about how to do that. 10 and 10 to 1, our first symbol will be JD or JD.com. That was one of the high requests yesterday in the chat room. And I will be giving you that sentiment update and let you know what the market makers are thinking and what our investors are thinking and how that affects the market. With that, I know we do have an interesting jobs report to talk about, among other things.
Yeah, it was a big report today. I mean, no doubt about it. You can see the 10-year Treasury yield did make a move back up. Still trading in this trading range between 280 and 295, where we've been now probably for about 5 weeks, maybe going on 6 weeks. And so I think the consolidation continues. But I think what this does, what the report does, it justifies the move higher that we've seen in the 10-year Treasury yield. So let's get into that economic news. This morning, of course, non-farm payrolls, big jobs report for February, 313,000 jobs. The market was expecting 205,000, so a huge hit for the bulls. It was about 50% higher than expected. January non-farm payrolls was revised from 200,000 to 239, so it was really an exacta of sorts, getting both the current month payrolls well above expectations and then revising the prior months much higher as well. February private payrolls, 287,000. Market was only looking for 195,000. And once again, January revised higher from 196,000 to 238,000. February unemployment rate, 4.1%, slightly higher than the anticipated 4.0% rate. February average hourly earnings, and I think this was a pretty big one too, came in at just a 0.1% increase. The market was looking for 0.2%. So you've got strong jobs growth with less than expected inflationary pressures, wage inflation anyhow. And then finally at 10 a.m. this morning, we got January wholesale trade inventories. They came in just a little above expectations. They rose 0.8%. Market was expecting 0.7%. So here is the 10-year Treasury yield. Now, I certainly would have expected a move higher in the yield based on these numbers, meaning that money is rotating away from the bond market and into the stock market. And I think we're seeing that on both accounts. Anytime the yield is higher, in this case, we're up 3 basis points, that means money's coming out of bonds. And, of course, when you've got the S&P and the Dow and Nasdaq, Russell 2000 all going up hand in hand, getting breakouts on the Nasdaq and Nasdaq 100, I think that's telling us the money clearly is rotating into equities, U.S. equities. So I think all of that is very good news. I thought the numbers were good. The reaction to the numbers, I think, is very strong. And maybe one of the first things to take a look at is the Volatility Index, the VIX, because this is a number that I've watched closely, talked about it a lot. Last 2 bear markets, we have not seen a move, a close, and I don't think we even saw an intraday move beneath 16 in the last 2 bear markets, the entire bear markets. So what would happen is we'd get that spike, and then any rallies we saw in the S&P 500 during the bear market would send the VIX back down, but we never got back down below 16. We did see this, I guess it was a couple of weeks ago. We did get a close just below 16. It was like 15.90. I can give you that exact number. Yeah, we got, 1580. We got down to a 1580 close, but then we bounced. So maybe a little bit of a kick save there for the Bears, but now we are right back down. And unless things turn today, it looks like we are going to get a definitive break below 16 on the volatility index. I think that is a bullish confirmation of what we're seeing on some of the indices. And the key indices, first let's pull up the Nasdaq. The Nasdaq Composite, and you can see right now we're up 99 points, 75.26.54. Previously, our highest close on record was at 75.05. We're at 75.26. So again, unless there's a reversal this afternoon, it looks like we are going to close at an all-time high on the Nasdaq. Next up, Nasdaq 100. Nasdaq 100, big breakout above that late January high. Also very strong, up 100 points to 7,066. I think 70.22 was the prior high. Close 70.22.97. Yeah, that was and that was also the intraday high. Right now we're at 70.65, so it's a clear breakout. The question just becomes now whether or not we hold it into the close. But as you can see, we do have Very strong PPO. This is telling us that momentum is accelerating to the upside. I think this almost, longer term, maybe in the short term, it looks like it's too deep of a cup. But this is, even though it's a V, kind of acts like a cup with a little handle back to the moving averages, reversing candle, and now off to the races. The measurement on this, by the way, from 7,000 down to about 6,200, let's call it, would be another 800 points to the upside. 7,800 would be the target on the Nasdaq if we get this confirmed breakout today. So we're not talking about little things. I mean, this could be potentially a very big thing for U.S. equities. Let's take a look at some of the industry groups. I want to start with the XLY. Actually, let's start with the sector, the XLY. This is consumer discretionary. Now here you can see we're actually still in this triangle, and this is one of the things when we first started selling and talked about, how I felt it was just going to be correction, and then we would resume the bull market. I was looking for continuation patterns to develop, and one of them I mentioned was a symmetrical triangle, and that's what we're seeing in a lot of different areas. Here we still have one with consumer discretionary, but we haven't broken the top of this declining tops trend line. And here is the rising bottom. So we're kind of squeezing off of an uptrend into this triangle. So the XLY we want to keep an eye on, make sure that it confirms to the upside, but so far it has not. Now there's been rotation within consumer discretionary, however, and so first I want to pull up the leading industry group today in consumer discretionary, which is hotels. And we've talked about this one in the past, and here is your triangle breakout. There is, in case maybe some of you might not be familiar with this, let me annotate and just show you what I mean by these triangles. So here was the top on the hotels, and I usually connect candle bodies. You certainly could connect the tails if you'd like, but I just like to know where groups open and close. And here, actually, that is a little bit off. But I think you can see that the trend line here has been broken to the upside with today's action. I think that's very bullish. Next move here would be this 2150 reaction high. I think that would just further confirm it. But the fact that we're seeing aggressive areas of the market like the Nasdaq breaking out, I think we're going to see one breakout after another over the course of maybe the next few weeks to a couple months. But in this case, it does look to me like hotels breaking out of this sideways continuation pattern, a symmetrical triangle. And the difference between this and other triangle patterns, of course, if it was an ascending triangle, you'd have equal highs and rising lows. If it was a descending triangle, you'd have descending highs and equal lows coming across. So, these triangles can take different shapes and forms, but they're all basically continuation type patterns. I prefer symmetrical or ascending over descending. Descending just kind of gives you more of a feel like we keep moving lower and lower close to support, and if that breaks, it can be a pretty bearish development. So I prefer either symmetrical or the ascending, and we're seeing a lot of these symmetrical triangles. Next up, let's take a look at the recreational products area. And I want to bring this one up because yesterday we were seeing it fail at resistance, and today we are seeing it break through resistance. So if we can clear this 50-day moving average, we'll clear all of these tops, reaction highs, and really off of this little uptrend here, you can kind of see maybe a little bit of sideways consolidation. So I think this breakout would be very meaningful and likely send this group back up to test its recent high up in the 420s that was established back in January. Next up is the specialty retailers. Talked a lot about this. I think we've got a cup in play. I was expecting maybe we'd get a pullback to the 20-day, but already it's starting to turn back up again. A breakout above 1475 would measure up 200 points on this specialty retailers index. Some of the stocks in this space would be like Netflix and so forth. So those are some companies and an area of the markets to consider as we go forward. Next up, restaurants and bars. Restaurants and bars trying to make a breakout. We got a double bottom in play. So a breakout above 1470 would be very strong for this group. And let me give you just one or two more, and then we will move on. Let's take a look at the XLI, which is the industrials. This one, too, is still kind of embedded in this symmetrical triangle, but the strength today is clear. And if we can get a breakout above that 79 level, that would be very bullish for the industrials. One of the areas that I've spoke about recently is the commercial vehicles, the DJUSHR. Here was that reversing candle. I remember talking about Caterpillar back when Caterpillar also reversed and led this index off this double bottom. Now we're moving up. Let's watch 2200. A break above that would be very strong. And the last one, let's pull up financials, XLF. Here you can see the triangle has broken on the XLF to the upside, and the group that is leading in this space today is the asset managers. Check out the breakout and also a symmetrical triangle that is being broken on this move. So a lot of bullish action today, no doubt about it. We'll see whether or not it holds up for the balance of the day. And with that, I'm going to turn it over to Aaron for a look at a couple upgrades, downgrades.
All right, I've got them all ready to share for you. Here we go. All right, so we had one downgrade that we're going to go over and then 4 upgrades. So I'm just going to start with the downgrades. It's right there at the top. Acacia Communications. So I was looking at this, trying to figure out what's actually going on here. I have the PMO buy signal, and I have a rising OBV. So I wanted to see if there was something bullish here to look at. And, you know, what I was noting is this trading range that we have. What I would watch, this is a downgrade. So I would suspect that we're going to have difficulty getting above this overhead resistance between the declining tops line and also the horizontal overhead resistance line. So I would be watching that closely. This is a downgrade. So even though I'm starting to see some positives on this chart, I would be cautious until we got that breakout. But a downgrade can provide an opportunity. And honestly, this chart doesn't look that bad. Look at the rising bottoms on the PMO, and the bottoms are even curving down just a little bit here. So I think there's some positives on this chart, but we really need to see that breakout because this is a descending triangle, and the descending triangle is bearish, and the expectation would be a breakdown. So if we get that breakout above that double resistance, as I would call it, including the 200-day EMA. I mean, there's like 3 levels of overhead resistance on this one. So if it were able to beat that and get over that, I would be feeling pretty good about Acacia Communications despite the downgrade. Burlington Stores is one of the upgrades. I am seeing a ascending triangle here, and that is a bullish formation because your bottoms are getting higher, people are getting more bullish, and even though you haven't beaten this overhead resistance area, the closer you come with those rising bottoms, the more likely you're going to see that upside breakout. I don't have the PMO buy signal just yet. The PMO bottoms are mostly flat, so I don't think that's telling me too much. OBV and scooters look good, but I like the pattern, and so I would be looking for an upside breakout off of this one. Let's look at Sept Therapeutics. This one I thought was very interesting. Nice PMO buy signal off of this, nice sweeping rounded bottom here for the PMO. You can see that we've had very clean signals the last couple times, so I like seeing a pretty clean signal. We have that rising OBV, which I like. I think you could call this a double bottom. You could maybe make your neckline up here at that intraday high, but I opted to make it at just above the close right here for that Pinocchio day, I guess. I think Martin used to call those Pinocchio bars when you get those very long ones like that. And this move has not only popped up above the neckline, it's not reading there right now as far as the last price, but we're seeing that pop above the 200-day EMA, so I think that's very positive. Let's see, I'm getting a little bit into your time here. Let's see. CyberArk Software. Flag formation, so I thought that looked pretty good. I'm not thrilled with this overbought PMO, but this is a really nice looking chart right now. You have a bull flag. You have a breakout above this area here at the highs back from June, July. And the next area of overhead resistance is all the way up here at 55. So I think this one looks pretty good, reward to risk, honestly. You could set your stop just below, I think, that 50 line, and then the upside potential is pretty good here on the upgrade. And finally, Williams Companies. WMB. We got the breakout from this descending wedge. That is a bullish pattern. You've got the breakout right here, and it's also above this little area of short-term overhead resistance, which I like. This could be a problem, obviously, but price has to work its way quite a ways before it can avoid. It won't be able to avoid that 5,200-day negative crossover. So technically, the long-term trend model would go into a sell signal, but I'm not that concerned about it because we have a rising PMO. The momentum is shifting. You can see rising bottoms here on the OBV, which I like. Scooters, but I love this pattern and I love the breakout. This is the only thing I'd be concerned about, and I do like that PMO sweeping upward. And those are the upgrades and downgrades that I have at this point. So I think it's best to hand it back to you so you can get started on your workshop. I'm very interested to see how you create your strong earnings chart list.
All right, appreciate that. Yeah, it's a lot of work. So I don't think anyone has any idea what they're about to embark upon here by asking me to share this, but let's do it and get going. The way I start, and this is for those of you just tuning in, this is how I create my strong earnings chart list. And I trade, I'm going to say, probably at least 90% of my trades over the last year have come from this strong earnings chart list. And I say at least 90 because I can probably only think of a couple that haven't. But anyhow, I started Zacks. And so this is the home page at Zacks. I come over here under earnings, and you could probably get this information in a lot of different areas. I mean, there's probably a number of sites that you can go to. I actually use the earnings calendar for my blog when I post the earnings for the before the market opens, and then also after the market closes that day. I get it from the earnings calendar, but that doesn't give me anything on revenues. So I go into the earnings releases area of Zacks, and then I go to the date. So right now it's set on today's date, which is the 9th. I'm going to show you an example. I'm going to use yesterday's 8th because I have updated this chart list through yesterday's earnings. I normally, after earnings, will wait at least a few days to see how a stock trades after its earnings, but there's not a whole lot this time of the quarter in terms of earnings reports. That's usually, toward the end of January and throughout maybe the first half of February when we get the lion's share of the earnings reports out. Once I pull this up, you can see the tabs going across here, earnings surprises. I always start with sales surprises. Normally, the sales surprises are fewer than earnings surprises. Not always, but I've just found over the years that it's lesser. So I'm starting with a smaller group. I think it would be more difficult to weed out starting from earnings surprise than it is starting at sales surprise. And then I sort by symbol, so I have them in alphabetical order. And I go down here and I show all of them so I can get them all on the screen here. And so you can see all the companies from March 8th, yesterday, that managed to beat revenue expectations. So we just start here on the top one, AEO. Clearly here's the reported revenues, here's what was expected, and it even gives you the surprise. I just want to know that they beat. I don't really put as much stock into the percentage that they beat as I do just the fact that they beat, because to me, if you can beat Wall Street estimates, you build confidence with analysts, portfolio managers, and that sort of thing. And I think that they're more likely to stick with your company if they know that what you say is what you actually deliver or beyond what you project. So let's just start with AEO. And you see AEO beat on the top line. But if I go over here to the earnings surprise and I sort, notice AEO is not here. So it beat on top line, but it did not beat on the bottom line. So I would eliminate it. That would not be something I'd be looking at. The next one on the list here you can see is AZUL. And by the way, AVDL, when I'm going through here, I normally will include every company that has at least 100 million in revenues. You get a lot of these companies that are much smaller, and I used to do a lot more of those companies, and then I realized by the time I started looking at charts, many of them were small companies that didn't trade many shares, and I ended up eliminating them because from a technical perspective, I wouldn't trade them. They weren't liquid enough. So I always take companies that have revenues of at least 100 million and are beating expectations. That's where I kind of start from. If it's between, say, 60, 70 million and 100 million, a lot of times I'll look over, and if I recognize the ticker symbol and I know the company and I know it's fairly liquid stock, or I think it might be, then I'll include it and I'll continue moving forward. So sometimes I'll go below 100 million in revenues, but generally speaking, the companies that are on my strong earnings chart list are going to have at least 100 million in revenues per quarter. Okay, so the next one that I picked after AEO would be AZUL. Now, if you go over here to the earnings and pull this one up, there it is. So it did beat on both its top line and its bottom line. So far, so good for AZUL. Now I'm going to switch over and show you a spreadsheet. This is just something you can use. You don't have to use it, but this will give you a little bit of an idea of, so AEO beat revenues, AZUL beat revenues, and I've listed them here, the ones that beat revenues from that Zach's report that I was showing you. Here are the ones that beat EPS. So AZUL, and there's Burlington. And then here's my chart analysis and some of my comments. Now, I don't do this for myself. I'm doing this for the purpose of this workshop. But when I looked at the chart on AZUL, and I'll show you some of these in just a minute, I didn't like it because I didn't think it had enough volume. So it's not, I mean, the chart looked good and it's borderline. I think it was borderline in terms of volume, but ultimately I just decided it didn't have enough volume. And some of these are going to be, you know, kind of borderline cases. And depending on my mood, sometimes I might include them, sometimes I might not. There's really no, you know, stated formula for doing it. It's really somewhat subjective. But let me go back over and show you AZUL. And by the way, here are the ones that I included. I think there were about 14 of these stocks that actually I looked at charts because they beat both top and bottom line. So a number of these, like Kroger here, you see beat on the revenues, but it didn't beat on the EPS. I don't look at the chart. I strictly limit this to companies that beat top and bottom line. If they matched expectations, they're not included. They have to beat top and bottom line. All right, so I'm going to go through these charts now that you see which ones I've made comments on. These are ones that actually did beat both top and bottom line. So let's go back over and take a look at the chart again. All right, so let's now pull up some of these that I just talked about. So let's pull up AZUL. So the chart looks great, and actually volume today on this move is awesome. So this chart looks good. The only problem I was having is looking back on some of these days, the volume was well below 200,000 shares in the day. And I look at the average volume. I want to have average volume of at least, you know, 200,000-300,000. This was just borderline. I just kind of decided, I'd never heard of it before, and so I decided not to include it. It's one that probably is borderline, though. It could have been included. I just decided not to. Now let's look at the next one. Burlington Stores, BURL. This one I am adding. Now you look at it, didn't make the breakout, but we have an uptrend, so we've got a bullish move to the upside. I think sideways consolidation, maybe even equal highs with higher lows, and ascending triangle. So when I look at this chart, I think bullish thoughts. I'm seeing an uptrend followed by a continuation pattern. I'm expecting it to break out, and I know they just beat top line and bottom line earnings and got a nice reaction too, by the way. Even though it's a black candle, this stock was at 116 and opened at 127. That's an 11-point jump with its earnings report. So there's a lot of folks that were interested in the stock. It's in a bullish pattern. Now, might it go back down and maybe even fill the gap first? It certainly could. I'm not saying I would jump in and buy it here, but it's going to go on my list. So it's one that I'll continue to watch going forward. So Burlington I added. CLMT. CLMT looks pretty good, right? I mean, we gapped up, million shares, looks awesome. Problem I have is this stock has a history of doing this. Moving up, back down, moving up, back down. Now we're moving up. I still think this downtrend's in play. So when I look at it, I'm not overly excited about it. So I didn't include it. CMD. This one looks pretty good. Nice move to the upside, right? Check out the volume. Yesterday it had the highest volume that it's had probably in, well, certainly this year. And it was maybe 230, 240,000 shares. Not going to do it. Not enough volume. COO, Cooper Companies. Nice breakout here. I wanted to see more volume with the earnings. I mean, the volume, you could probably make an argument that you're okay with, but there's been some pretty big volume days here, and we're breaking out of this sideways consolidation. I would expect that traders would just pounce on this thing. I would be expecting, maybe 1.5 million shares, and we were getting like 500,000-600,000 on the breakout. So this one meets the liquidity parameters that I set, but I just don't like, I don't think the reaction is strong enough for me. So again, if I wanted to, I could probably have 1,000 charts if I wanted to look at them, but I'm trying to narrow it down to the best ones. And this one was just okay for me. Let's see, I'll go through a couple more. Let me look at the next one I added. IGT. Talked about this one yesterday. It's in the gambling area, international game. I love this candle. In fact, this pullback, if it had gone back a little bit further, I probably would have bought it today. I was looking at it. It had a red candle back down to about 29.30. And I was looking to see maybe if I get a little bit cheaper. It's now reversed back up. I think the stock goes higher from here. I think it's one of the best looking stocks in the gambling space. And so I believe we're going to see it continue to move higher. So this one I definitely wanted to add into my list. Let's see if there were some others that I wanted to mention here. Let's take a look at MTN. All of these, by the way, are ones that on March 8th beat top and bottom line. So I'm trying to go through the rationale why I would include it or why I wouldn't. Here, great move. Big move up. I think volume's probably heavy enough. Problem I have, market's been going straight up. Look at this stock. It continually struggles when it gets up to about 235. After earnings, it's up to 228.5. Am I going, what am I going to try and get $6-7 out of this $230 stock to resistance? I'd need to see more. Now, if it had gapped up above these tops and traded up from there, I'd probably have it on my list. But the fact that we're still in this trading range, it's just not really interesting me. And then the last one I'll show you, and this one I did add. I added 3. So I added the Burlington, I added IGT, and then I also added Marvell. And you can see here with Marvell, after earnings, it makes the breakout. Probably the second highest volume day in the past 3 or 4 months. And with that, we got a major triple top breakout. And it also happens to be in a nice space. And that's the other thing sometimes I'll do is I'll pull up my relative chart here. And you can see it is in the semiconductor space, which has been one of the strongest groups. Semiconductors relative to the S&P 500 been on fire for the last month. So you're also getting a stock that's not only breaking out, but it's also in a sector or an industry group that is very strong relative to the S&P 500. So that's my daily analysis. Now, this was a day when we had sales surprises of 67. Now, I'm probably going to scare you to death with this one, but let's go back to early part. Let's do like February 7th. Here we had sales surprises. Oh, 77. That wasn't too bad. Maybe it might even be the end of January. Let's do the week before. Oh, there's 146. Oh, but sales, well, 78. I know that there have been a lot of days where I've had well over 100. Let's try another day. Let's go back into. It's not letting me go back to February. Let's try this way.
Hey, I've got a couple questions for you, Tom. How many stocks do you follow on a daily basis?
Well, I have in my chart list right now about 260 stocks after updating through yesterday. Oh. So, but I don't sit there. I mean, sometimes I will. A lot of times when I do the setups, my trade setups in my blog on Mondays, sometimes I will go through each chart, 260 charts. But usually what I do is I run scans, and I'm going to get to that in a little bit, how I run the scans.
Cool. Also, how long after you add it do you continue watching the stock, or you just have it on the list and then you come back and look at it just based on the scan, or do you basically run through all those charts, in candle glance or something, or?
Well, the charts will rotate. So a stock comes on now, but it's going to report earnings again in 3 months. So it's close to the earnings date. It gets removed. I delete it off of my chart list. And I've actually left a few on. I haven't deleted. I wanted to show that, and I'll get to that also in just a few minutes.
Awesome.
All right. So let's take a look next at, so you kind of got an idea of at least going to the website, finding the sales surprises, checking to see if they're also earning surprises. And then if they meet both, then I look at the chart. And if the chart looks good, then they go into my chart list. All right, so let's talk a little bit about the chart list itself. So I have a strong earnings chart list. And on here, I have a number of stocks. I will show you. Let's go ahead and edit the list. Here you will see that I have them sequentially numbered. 2346 is the first one. That's only because I had deleted 2345 because earnings were coming up. Now, 2346, all of these I have in sequential order, but they're also in date order of earnings reports. So you'll see, from Zacks, you saw how I sorted alphabetical order. And notice this particular day, all the A's, and then the G, K, L, N, O, T, and then all of a sudden we go back to C. That's the next day. So that I can tell you that's going to be the next day all the way to U. And then Adobe is going to start the next day. And then you can see I get up to H. Next day is going to start with the C. Once that alphabetical order breaks, and you're into a new day. But the whole point here is that I'm going to keep these on the chart list until it's time for these companies to begin reporting again. So as I update this periodically, maybe every couple of weeks, I'll update this. During the big part of earnings season, I might do it once a week. But once we get beyond the bulk of earnings season, then I might do it every 2 or 3 weeks. And so right before I start adding charts, I will delete some of the old ones. Now, let me give you an example of one that I just added. Well, I added a bunch of them, but let me show you Keys. So here you can see Keys has just been added, 2607. Right now my chart list goes up to 2625. So this is one of the more recent stocks that I just added. If we go all the way back to the top, you're going to see Keys was on here. Now I left it because I just wanted to show you all that I can just go through here. But what I would do is just check on the ones that I want to get rid of, and then go to the bottom and end up deleting them. And I'll do that later. But yeah, if I didn't delete them, then I would keep getting these stocks over and over again. Some of them might beat multiple quarters in a row. Some of them, GEF, I think beat this quarter, but or beat last quarter, but I think just came out with earnings that were horrible. And so, some I've had questions before. Why don't you just buy, since they're beating top and bottom line, why don't you just buy them and hold them? Well, a lot of times they beat many of these smaller, mid-sized companies, or even large companies. They'll beat one quarter, and then the next quarter they lose, and they give it all up. They give up all the gains from their prior quarter. My strategy is not to hold into earnings. I continually update this chart list, so I have what I feel like are strong stocks, and then I simply wait for opportunities to get in at better prices. So how do I get in at better prices? Well, I run scans. Obviously, looking at 260 charts every day during the day would get a little monotonous. Well, maybe not for me because I like doing it, but it would still probably get a little tiring by the end of the day if you just continually were going through and looking at these. So if I go back to my page here, home page, dashboard, and I come down here, I can select scans. Now I have, in this particular account, this is my Market Watchers stock charts account. So this is not the account that I use primarily for my trading, but I did set up a few scans so that you can see a little what I do. Now, the first one I set up is a 10 a.m., what I call 10 a.m. High volume scan. And I can edit the scan by clicking there. And what you see, now this is on the standard scan workbench, but you can do it on the advanced scan as well. But on here, at 10 o'clock in the morning, this is going against all United States stocks. This is not against my strong earnings chart list, although I could make it that way if I wanted. But at 10 a.m., I can run this scan, and it gives me every stock that's doing at least 40% of its volume, its normal daily volume, in the first 30 minutes of the day. So if a stock has got news out there, or it's making a technical breakout, and there's a lot of traders getting on board, this is kind of a scan that I can run sometimes at the beginning of the day to alert myself to those types of stocks. And some of them I might want to trade, some of them I might want to watch, whatever. But that's one thing that I do. And you can see it's very simple. I just use average volume greater than 300,000 shares, average price greater than $1. I don't like stocks less than $1. just my personal preference. And then volume is greater than its average last 90 days volume. So the current period volume is greater than the average times 0.4. So if the average was 1 million, if a stock had an average volume of 1 million shares and it's done 400,000 or more in the first 30 minutes, it would come up on the scan. All right, but I'm going to concentrate on the scans I run against my chart list. So let's take a look at the high volume scan against strong earnings. Now I timed this, actually I set this up just for this. And so here, if I pick this one and edit the scan, you'll see that now I'm actually scanning against my strong earnings chart list. So it's not going to scan all US stocks. It's only going to scan the stocks I have in this chart list. And I've got 0.75, but I'm even going to add it, make it higher. I'm going to say, give me all the stocks in my strong charts or my strong earnings chart list that have already done their average volume over the last 90 days today. So if their average volume is 1 million shares, they've already done 1 million shares today. And then I am going to update criteria. Now you can see that the average volume times 1 is up here, and I'm going to run this scan. So now this will tell me in there which of my stocks, there are 10 of them that have already, 10 out of 260, have already done their average volume. And here it is. It's not even 1 o'clock. Actually, 12:45 Eastern is the halfway point of the day, and we're almost there. And we've already done an average volume or more. So you can pull them up. ETSY is one. Here's another breakout. This is one that Aaron was just talking about recently. Beautiful chart, great breakout. Here was the earnings news. The breakout above resistance, for the most part, continued moving higher throughout the day. It's continued pushing up, and look at the volume coming in. To me, that's a stock under accumulation. Now, I don't want to chase it when I've got an RSI at 84, but if we get a pullback and we get back closer to that 24 level, especially, I'd love to hit 24 at the same time the 20-day hits 24. Now, I'm not saying it's going to, but it's certainly a possibility. That's why this stock is on my list. But looking at it, the fact the volume's heavy today is not going to change my mind. I think it's overbought. I wouldn't buy it. We come down to the next one, Guidewire, GWRE. Now, this one's pulling back, and it's in the gap support zone. This one's got my attention much more than Etsy, because I do think it's getting closer and closer. The way it's acting right now, I probably would see if maybe we could get a gap support test. And if we can do that while this 20-day moving average is coming up from underneath, my target's probably going to be up around 91. So the closer I can get this back to 85 or so, the better my reward to risk is going to be on this trade. So GWRE, I think, looks very interesting. Next up, Lam Research. So Lam Research, what's going on with this? Well, it's breaking out of a double top. That's pretty big news. So for those of you who like to play breakouts, this might be a potential breakout if you catch this early in the day. But again, we're talking about a company that's just working in its way into overbought territory. So for me, it's probably a little stretched, but clearly it's a solid stock and it's in a great space. Let's just take a look at one more of these. Let's go down here, maybe one you haven't heard of. How about NTNX, Nutanix? Wow, this one's very overbought, but you can see why these stocks are on my strong earnings chart list. Huge move up, very strong volume to accompany this price move to the upside. So I think there's accumulation taking place. And again, I don't want to get it when it's strong. I want to get it when everyone's overlooking and it's pulling back. So it's got a ways to go. You might think, well, there's no way it's going to drop 20% down to its 20-day moving average. I've seen some pretty strange things in the market, and that certainly wouldn't even be close to the strangest. So I'm going to wait. But that's one scan. Now let's get rid of this, and let's get rid of this scan here. And let's go back over here and go to the home page. And let's take a look at that other scan that I had here. And that is RSI 40 to 50 strong earnings. Now, if you go through these charts enough, and I would certainly suggest that you do a lot of research and look, try and gain that experience of looking back to these earnings reports and seeing how these stocks trade after earnings. I've spent a lot of time doing just that. And so if I run this scan, actually, let me go back. I don't want to run the scan just yet. I want to show you the scan. All right, so let's edit the scan, then you can see it. But essentially what this is again, I'm scanning against my strong earnings chart list, and I'm looking for an RSI greater than 40 and an RSI less than 50. So I'm getting stocks with RSIs in the 40s. Now, why is that important? Well, many times during uptrending charts, pullbacks that get into the RSI 40 to 50 range can sometimes mark pretty significant bottoms. It also assures me that I'm buying stocks that are not overbought. So I want to get these stocks that pull back to me, that I like, and some might have come back and the RSI might be 40, and I might look at the chart and say, no, I really don't like it. In fact, a lot of times that happens. But it alerts me to stocks that have pulled back, and sometimes I get some really nice trades. So here, let's run this scan. Now, on this one, I got 32, and you'll notice that these are a little different than the others. The others were based on volume. This is based on pullback. Now, it could be a heavy volume pullback. We might see a stock on here that was on the other list. I'm just kind of going through quickly to see if I see any. No, I don't really see any. But we could pull these up, and the other thing you can do is once you pull these scans up, you can rank them by scooter. So maybe look at some of the high scooter rankings that have RSIs back in the 40 to 50s. So these are great relative performers that maybe you're just struggling a little bit in the near term. So we pull up something like TLRD. I know for a fact retailers are not doing nearly as well today. So we're getting a little bit of rotation away from retail, and that could be setting us up. But this is a stock that had been doing very well. Notice higher prices, lower PPO, negative divergence. We go right back down. We reset the PPO at the center line. The stock has really not been doing a whole lot. And look at the RSI. Instead of chasing with an RSI in the 70s and then going through this, which would be absolutely painful for me, instead, now I'm looking for a stock maybe that's pulling back and has a much better opportunity to move higher from this, from a lower level and near support. I mean, we're kind of hugging this 50-day moving average, which has been great support for the stock. We haven't had a close below the 50-day moving average going back the last 6 months. So now we're sitting on the 50-day moving average. To me, it seems like not a bad entry. I don't own this one, but it's certainly one I would consider. Kohl's, KSS, another apparel retailer. And I actually like this chart a lot. Here we've got an equal top, higher lows. We could have an ascending triangle. We might go back down a little bit lower. If this got back down to around 59.5, 60, I'd probably buy it. Just because that's solid support off of an uptrend. I'm thinking bullish results. I think we're going to follow through with this bull market. So pull back to a support level, a key support level, and a bullish pattern would be a time when I would be very interested in the stock. So Kohl's, I think, on this pullback is getting very close to an interesting level. So that's essentially how I go to Zacks. I get the charts. You saw on that little spreadsheet, and that's not exactly how I do it, but I wanted to be able to show you how you can look at both revenues, earnings, get the ones that beat, and then also look at the charts. And you can see here I've got the summary for what we've just gone over. So you gather your data, you identify the companies that beat, you review the charts for technical strength. The ones that you like, you add to your chart list. I keep them sequentially numbered, so I know the ones that have the lower numbers are the ones getting closer and closer to their next earnings report. And then I run scans for my trading candidates. Now, here's the most exciting part of today, and that is, most of you probably know, but I used to work at Earnings Beats with John Hopkins. Actually, was formerly referred to as InvestEd Central. And then I created Earnings Beats back in 2013, late 2013, because I started trading using this philosophy, and I thought it was awesome. So we started Earnings Beats. So that is the only thing that Earnings Beats uses to identify trade alerts, is off of this strong earnings chart list. They call it Earnings Beats Candidate Tracker, which is a strong earnings chart list is all it is. Now, I talked to John last night, and many of you have asked me before, well, can you just send me your chart list? Well, unfortunately, when I left Earnings Beats and came to stock charts, I had a contractual commitment to Earnings Beats not to give that information away. So I can't, by contract, do that. But I talked to John Hopkins last night, and we've agreed that he is going to sync up his chart list with my chart list, so they're going to be identical. And If you go to their website at earningsbeats.com right now, if you were to sign up, there's a buy one get one free special where if you pay 1 month, you'll get the second month free, and then you could get the chart list. But what I convinced him to do is to offer all of you a special free, as in $0, a free trial offer. I think it's a 30-day trial, but you'd have to look, make sure. So you can, experience the service. But the key part is this chart list will be sent to you. If you're a Stock Charts member, you have to be a Stock Charts member. You're probably going to need to be more than a basic member, because I think basic members, you only get one chart list. I don't know how that works if you're getting an imported, one chart list. But if you're an extra member and you get multiple chart lists, it's a piece of cake. You let John know what your account is, your email or whatever. He sends it to you, and literally you just click on the button and it gets downloaded into your account. You don't have to do any work. And like I said, this is a free offer for, I believe, 30 days. You just have to remember to cancel before the 30 days is up. But that is what this URL is down here. www. Make sure you have the https://www.earningsbeats.com/public/free-trial-offer.cfm. And that should take you to the page that you will not see on Earnings Beats if you go in to their public site. This is nowhere to be found. So he gave me this special link. I wanted to provide it to you so that if you're interested in starting a list like this, well, all the work's done for you. And I can tell you that if he sends you this list, it's going to eliminate about probably 72 hours out of your schedule. It takes a lot of time to put this together each quarter. And then from there, you can decide if you want to stay with Earnings Beats, or if you want to do it yourself, or if you want to scrap it all together because it's not working for you. But just remember that you do need to cancel within 30 days or you're going to get charged at Earnings Beats. So I want to make sure you understand that. But I thought it was a great offer and very generous. And so I'm really excited to pass that along. And that's it. That's a piece of cake, right?
Yeah, exactly. That'll take no time at all. I can do that tonight.
Yeah, not a problem.
No, that's excellent that John's offering that free trial. So I certainly would check out anything that is billed as free. So.
Yeah, and the other thing too is if you go in, if I just pull up one of these charts, they have some basic annotations on them as well. Huh? Actually, this one doesn't. I don't know why that isn't. They should all have them. Wonder if somehow it got eliminated in the transfer to this account. Well, when John sends you, they will have some basic annotations on them. Like I said, I don't understand why. I think that first one I had up there did.
Well, right now we can't see your screen anyway, so it's okay.
Yeah, well, I'm just looking. Okay. Well, I'm going to share. I'm going to take it back because I got to, well, although you're going to take it for the 10 and 10. Yeah, there'll be some very basic annotations. When I do the 10 and 10 and I use like that price support resistance line, that's most of the annotations, just kind of keep you, zeroing in on some key support levels. That's mostly what you're going to see. But anyhow, I thought it was a great offer, so take advantage if this is something that really interests you. And with that, I'll let you take it away, Aaron, and we'll go through the RRG.
Yeah, well, I'm actually in the process still of putting in the symbols, but I always think it's good practice for everybody to see how you can do that very quickly. So I'm just going to take us there right now. So under, make a new chart list, I just go into the Many tab, and I'm going to put them all in right now. You can see as I talk. Actually, if you want to get your symbol request, or if you want to see a symbol request that somebody else has put up, I would recommend going into that chat room and liking it. I'm actually starting to look at the popular votes, so the ones that have gotten a lot of interest, I will move to the likely stock you'll look at. So, but as you can see, it's very quick. You're also getting to see all of the different ones that are here. And let's see, UNP, CLVS. Look at you guys. We've got so many that we have here, which makes it very difficult because everybody wants theirs to be at the top. So we do need to start with JD. So let's see, TO. I have two more. Look at this. Quite the array. All right, so see, now I have all 27 of them in there in what, less than a minute. So let's go look at the RRG. Here we go. Take it to daily. All right. So the closer you are to the center, the more closely you're relatively close to the benchmark of the S&P 500. So one of the things that Julia said is to kind of look at some of these outliers, and as well as those that are moving in the northeast direction. Right now, we've got a lot of healthy stocks here that people want to look at. But I'm going to hand it over to you for JD. And we can see these improving here in the improving categories. So there's a chance you might see one of those too.
All right. Well, I saw JD was like in the weakest quadrant, and I'm not giving up on the stock. I think we looked at this one maybe over the past couple of few days because I think it was after this gap down. I like that it held the prior gap support, but you can see the volume picked up. That you might look at as a negative, but also consider that after gapping down and moving down below 42, it closed near the high of the day. So all of that volume, we ended up seeing a close near the high of the day. That can be a positive depending on how you look at it. I think the OBV might look at that negatively, and I think accumulation distribution looks at it positively, unless I got them backwards, but I think that's right. But after that gap down, check where we went here over the past couple of days. Went right up to the top of this gap resistance. So we have now filled this gap. And so I think we're range bound between 42 and 46. A breakthrough gap resistance I would find would be bullish, and a move back down to below this support zone would be bearish. In the meantime, like I said, I'd be looking at maybe just a sideways consolidation.
All righty. The most popular symbol request in the room today was Apple. So I suspect we should look at Apple.
I love Apple. I think, and I'm not talking about the fruit, I'm talking about the stock. But this is I think, a really nice looking chart. I've been talking about computer hardware making a breakout or potentially getting ready to make a breakout. The move down, we came right back up. Many of these days on very heavy volume. I think there was a lot of accumulation taking place. Essentially, what we have is more of a cup handle back to the 20-day moving average, and here we come up. I'd like to see volume pick up and get a close above 180, but I think that would confirm another move to the upside. Notice during this pullback and consolidation, the PPO has barely even budged back to the downside. I think that it's got strong price momentum. I think overall volume trends are fine, and a breakout would be bullish. So I'm a fan. I like Apple.
All right. The next most popular one was McDonald's. Are you loving it?
I'm not loving their $1, $2, $3 menu. They are
apparently investors weren't either.
They are bouncing back. I mean, the restaurants have started to pick back up again. I think that's helping McDonald's. But if I pulled up, say, this relative chart that I like to show once in a while, you will see that not only is McDonald's downtrending, but the restaurants and bars have been downtrending. They're trying to actually take out the reaction high here, even though McDonald's is not. So what that means is that McDonald's, on a relative basis to its peers, is not performing very well. McDonald's relative to the S&P 500 is not performing very well, and its peer group is not performing well relative to the S&P 500. So if I was going to go into this space, I doubt that it would be McDonald's. Now, if we can get the close back up above the 20-day, now that we've gone through gap resistance, then maybe we'll start to see some improvement here on the chart. And maybe what this will end up being after a long uptrend is a left shoulder, neckline, an inverse head, maybe move back up to put in the right side of a neckline, and one more pullback could put in an inverse right shoulder. So there's still possibilities here for McDonald's, but I think on a relative basis, I'm not a huge fan. And I do want to put some kind of an annotation in here. But the biggest thing for me is just the fact that on a relative basis, this has not been a great performer. So something that would bother me, for instance, is this, and the fact that McDonald's, if I'm trying to outperform the S&P 500, it's really hard to do it with a stock that's downtrending on a relative basis. So all of these downtrends would bother me.
All right. Let's see. The next one is going to be an ETF, the cybersecurity ETF, HACK, HACK. Clever name.
Yeah, I always like these clever tickers. But HACK, let me go back to a regular. I don't need the relative chart on this one. It's an ETF. tracking cybersecurity, huge move to the upside. I mean, you can see when you get this breakout, and this is, kind of the poster child for how I like to trade. But when you get the breakout above price resistance, there was the prior high, had a couple tops, pulled back. When we go through and you pull back and you hit both price support and the rising 20-day moving average, I'd mentioned that on a couple of the stocks within that strong earnings chart list. That to me is the best reward to risk entry, because now I'm pulling back, I'm testing price support, I'm testing the rising 20 with a strong PPO. I expect that to hold. So I can get out very quickly if it doesn't. In this case, it held, and you can see a huge move here. Been up probably about 7% or so in the last 6 trading days. Pretty good for an ETF. I like it.
All righty. Next one I have for you, another popular request, Tesla. TSLA. I suspect you already knew that.
Yeah, I heard that one once before. I think it's pretty clear that 360 is a level that this stock has got to negotiate. I mean, automobiles are haven't been the best area of the market, and you can see Tesla clearly is struggling when it gets to 360. We saw it multiple times back in October. We rallied all the way back in January, got there and failed. Did it again just a couple of weeks ago. And so I would say we're in a trading range that spans 300 to 360. We're sitting almost right in the middle of it. I'd sit on my hands.
All right. Next one, another popular, Lockheed Martin, LMT. I see a reverse flag, but I don't know. It's still holding, it looks like rising bottoms.
Yeah, I like the trend line here. I love the area. I love the space. Lockheed Martin. We got the double top. I think it's an ascending triangle that's building. I mean, again, I'm looking at the market from the standpoint of us going higher. I think that that we're still in a bull market. So I may look at the charts a little differently because I'm expecting the bullish outcomes. But to me, I'm seeing higher lows coming across off of that top, and I could see this continuing to play and eventually getting a breakout. Now, the reason I think we're seeing this 50-day test here is that off of this high, you can see higher prices. Look at that PPO. When that happens, I generally look for a 50-day test and a reset of the PPO. Here is your PPO back down to the 0 line, which is what I call a reset. That's where your 2 moving averages are exactly identical. That's why you get to a 0 line. And we also came back to the 50-day. So I think this is being accumulated in here, and I expect another run back up 360 and ultimately through that. So I'm bullish Lockheed Martin.
Excellent. Next one is CTB, as in boy, and Cooper Tire and Rubber.
This one I'm not overly excited about because I don't have to pull up a relative chart. I think you can probably just look at this the last couple of months and see we're not even getting a bounce. The market's had a huge bounce. Nasdaq's breaking out to an all-time high, and CTB is still languishing down near its recent lows, which, by the way, took out the lows in October. So it's hard for me to get excited here. I mean, yeah, as maybe a value investor or somebody who likes to bottom fish for a bounce, all of that's possible. I think we got a couple of issues here. The first one is going to be getting back through 33, 80, or 90. See the gap down in the very heavy volume? We have not been able to close back above this level. And to do so would also require a close back above the 20-day. Maybe with the PPO turning up here, maybe the next low with a positive divergence, we might have a shot. But for now, I would wait. I don't see any reason to jump in here.
Okay. Let's see, the next one, PENN. And this is in the, I believe, gaming. Yes, Penn National Gaming.
Yep. Good. I like the space, but when you've got an underperforming stock in a pretty decent space, I mean, recently we've had great moves up on the gambling stocks, and here Penn National keeps going lower and lower. So this is probably another one where I'm going to pull up the relative chart and just show them relative to its peers. And check out what's been going on. I mean, it is in a relative ski slope to the downside, and that is not what I want. If I'm going to try to outperform and I want to get into gambling stocks, I would much rather have International Game Technology, IGT, because of its recent stellar earnings report and its relative performance, which is picking up, rather than trying to outperform the S&P 500 with a company that is underperforming. So those are some of the reasons why I would pass on Penn National.
Okay. Next one is Fossil Group, FOSL. See a declining wedge, but it's PMO looks horrible. I suspect the PPO does too.
Yeah, this one I've actually been watching, and I will buy the stock today if it closes above its 20-day moving average, because it's breaking down intraday. I think if it closes back up above, say, that 1272 level, especially 13, and holds these lows with a long tail to the downside, that would probably get me in this one. This is one that I'm watching pretty closely. This was earnings related. Stock went from 9 to 17 with its earnings report. That is not really heard of very often. I mean, we went sideways for a long time. So I think this candle changes the character. And what I've been doing is simply waiting. This is what I talk about with the strong earnings chart list. You get this move and you want to jump in, but I've seen it over and over and over again, how many of these stocks will come back and give you a much better entry point. I think today will be really interesting to see. And so when I annotate this, the thing that's probably most interesting on this chart to me is going to be this candle right here. I don't know why it did rectangle, but hey, that's something new. I'll go ahead and go with it. But I'm going to watch and see how we finish today, because you can already see volume is more than we've seen the last several days. And we still got another few hours to go today. So it's going to be a big volume day. Do we get that reversal? I think if we do, we could be putting in a low for Fossil. So this one will be very cool to watch into close today. Now, if it finishes near the low, it may go all the way back down to the 50, prior price support. I mean, there's a lot of different places it could go. I would not be buying if it finishes with the candle that we're seeing right now. But if we get a reversal, it'd be very interesting.
All right. I know we've talked a little bit about the Nasdaq 100, but we'd like to look at the QQQ and see what you're thinking as far as a target from a possible cup and handle.
Yep, I would completely agree with the cup and handle analysis. We are getting the breakout. There is the move higher. A cup and handle or cup with handle is a continuation pattern, so you have to have a prior trend. Here is the uptrend, and we could go back even further. It's a much bigger uptrend than that. But here is the cup, and use the parabola. These tools are very cool. But right there's the high on the left side. There's the bottom. And so there is your cup. Here is the handle that I always like to see. Reversing candle. That's a piercing candle right on the 20-day. And now move to the upside. 171 down to 150. Or maybe, yeah, let's call it 150. 21 points, the measurement. And so the target would be the breakout level at 171. You add the 21 in, and that is a 192 measurement on the QQQ. That's a pretty nice little pop. That'd be another 10, 12%.
Absolutely. That is all of the 10 and 10 stocks right now that we could look at today. I will keep track of some of these requests for Monday, but it was great to use that polling process as far as the likes on which symbols that other people have requested that you like. So recommend I think we're going to continue that on. I think that works out pretty well. Of course, some of you probably don't think so if yours wasn't selected, but let's go ahead. I want to talk to you about, what do you think, Tom? What am I getting ready to talk about?
I want to talk about ChartCon.
Exactly. So ChartCon, I'm not going to get too crazy here, but it's an online conference that we sponsor that'll be in August, and you can register and attend virtually. It's a virtual conference. We did this 2 years ago. It was extraordinarily successful. We loved it. And it's a great way to see everybody and be a part of a community. I know last time we had an app that helped us interact with all of you who were there virtually, but you can also go and be there in person. And highly recommend you consider this. We do have a handful of VIPs right now, but you can join us for just the conference part and get your front row seat and talk to us really consistently over that entire weekend. Because as I keep telling people, we don't go hide out in our hotel rooms. We're usually out and about and love to connect with you. And if you really want to get crazy or you're looking for a summer vacation, join us on the cruise afterwards. That might be one way to talk your significant other into going on this. Take them on that Alaskan cruise, and we will be there as well. Most of the presenters will also be on the cruise, and again, would love to interact with you further. So consider it. But all of you out there, if you haven't signed up just to do it online, go do it. All of you are the kind of people who want to do this and see it. So go there and register. Right now, there is early bird pricing. The price will go up as we get closer. So highly recommend you go check it out.
I just want to say you don't want to miss the boat.
Yes, there you go.
Sorry, couldn't help it.
I don't know. Maybe we want you to, but we'll see. All right, let's go ahead and I'm going to get us into the market update to finish off. And here we go. I am going to do like I always do. This is where you get, obviously, from that report that you can get from the Pro Center, but then you can come down in here and adjust, or maybe you want to include something else, like Apple was a big deal today. So let's go ahead and put that in here. So now we have a little bit of everything. These are 2-day, 10-minute charts, bar charts, I believe is how I set it up. And we can see, really, it's a great day for pretty much everybody. We had the nice gap up. Dow is continuing to soar, make new intraday highs, S&P 500 as well. The Nasdaq continues to make new all-time highs today. And the Russell 2000 small caps are taking off as well. So we're seeing strength throughout the market between large and small caps. TSX, we can see, also is having a pretty good day, maybe not as forceful as we're seeing in the US markets, but still doing well. Treasury yields were up, and they are pulling back somewhat, currently reading at 28.92. UUP is down slightly, 2 cents, reading at 23.56. Commodities are up, and likely because we're seeing this nice move on USO breakout and now a flag on the intraday chart. So I would expect to see more upside as far as oil is concerned. Gold is mostly unchanged. It's had a rather volatile day, but it's ended up right now pretty much close to where we were on the close yesterday. VIX, as you were mentioning, Tom, is now reading below 16. We're now at 1523. And yes, typically if the VIX is below 16, you're going to see, you're not going to see a bear market. So I think that's a pretty good estimate. Look at our Apple stock that everybody wanted to see, flag forming on here as well, and doing quite well, but it has pulled back somewhat since lunchtime. All righty, let's go and look at our market summary, see where our sectors are currently. And here we go. Financials, industrials leading right now, with financial XLF up almost 2% today. The only laggard really is utilities, but we're only seeing a small 5-cent change on XLU, reading 49.21. And U.S. industries, broker-dealers, oil services, transports, all sitting near the top, with broker-dealers and transports up over 2%. Utilities and gold, as well as REITs, are all laggards, and the only ones of the industry groups we're following here that are in the negative. And with that, I know I have plenty to talk to you about as far as sentiment goes, so I'm going to go ahead and move us over to our sentiment update. All right, and here are the list of the sentiment indicators that I do cover. If you want to get some of these sentiment charts, you'll find some of them in the Decision Point chart gallery, and I have a few in my, well, I don't have any in my Decision Point chart list, but when I write about these, go on into my blog, click on them, save them to your own chart list, and that's a good way to get them. So first, I was looking at sentiment overall. I'll be perfectly honest, is not telling us a huge amount of information right now. And I think that's really because there is and has been a lot of tentativeness about this rally. And, you know, the bearishness is still sort of out there, but people want to be bullish. Obviously, after today, it probably changed a lot of perspectives for many. But I think there's still some important things to note here on our sentiment chart. So just a refresher, if my put call ratios are high, that means that investors are bearish because there's more of the put request than the call. And so that tells you that people are feeling bearish. Sentiment is contrarian. So if we have investors feeling very bearish, that means the market is overbought as far as sentiment, which is why I look at the higher readings are going to tell you the bearishness of the people, but the implications for the market, it's contrarian. It makes sense when you think about it. If everybody is on the bullish bandwagon, if we're all out there just cheering, and every cover of every magazine, investment or money magazine, is talking about this great bull market, we're all just so excited. The more saturated that bullishness becomes, the more people who get involved in it, the more likely you're going to see a correction or a move down. And we really had that with this parabolic rally back in the previous year. So with that, let's look at the sentiment. So right now we can see what I'm noticing is this divergence between the tops on the CBOE put call ratio and the equity put call ratio. I wasn't sure if that really meant anything, honestly. I went back to just sort of look at when we've had these previous negative divergences or divergences, really. And typically it looks like really what I'm seeing in the past, and I could go back further, I haven't done that yet, but typically it means more of a neutral position. We end up moving mostly sideways. We can see a little bit of downturn here. And obviously during, from November 2017 on, we had that parabolic rally, but you can still see just a little bit of a downtrend right there after we saw that particular divergence. So we're having one right now. And I'm going to read into this neutral mostly. Because that's what we're seeing typically after these sorts of divergences. It's not particularly negative for the market, but it isn't really positive either. And I think this really explains some of that there is a lot of indecision and tentativeness out there to really take a side. And I think that if you look at the AAII survey chart, and this is the American Association of Individual Investors, it's a poll. People come and say on their website, yep, I'm a bull or I'm a bear. And they tally this all up. And what we can see is the bulls have definitely been pulling back. People are feeling less bullish and a little bit more bearish actually this week, as you can see a slight increase in the percentage of bears. And ultimately, though, I look at this and I see that there are, how many people sitting in the neutral category? If you add these two up, we're looking at about 45%, I think, that are sitting in the neutral category. So again, indecision. Look at our ratio. It's almost 1 with an even amount of bulls and bears. So again, neutral, more neutral readings here. Name exposure index. This is the National Association of Active Money Managers. And you can see that we look at what their exposure is. They report that, how exposed they are to the market. And they have pulled back exposure this week. But as you can see, this reading is really middle of the road. It's pretty middle of the road based on what we've seen previously. So again, I'm feeling pretty neutral about what's going on as far as this chart as well. And some people would say, well, that's not telling you anything if it's, flat. No, as I wrote about, I think it was on Wednesday, maybe. I wrote about the RIDEX chart and the fact that, when I start seeing a lot of mixed messages, a lot of neutral readings, that is just to me caution. It doesn't mean that I'm super bearish. It doesn't mean that I'm just a bull, but neutral is kind of like in cash is sort of how Decision Point considers neutral. So you're being cautious. And so when I get mixed messages or I get neutral sentiment, I turn up the caution dial. And I wrote about that yesterday, that, while I have added to some positions this week, I have tightened a lot of stops because I think that the readings and some of the indicators that I've been seeing are mixed, and that tells me to use some caution. So I just need to pay a little closer attention to my investments. Well, obviously today it's turned out great. Haven't had to worry too much, but mixed messages. I don't think we're out of the woods. I know Tushar is of the belief, we had him on, Tushar Shande, on yesterday, and he's looking for a double bottom. I've been of that, I'm in that camp as well. If I start seeing my indicators get, pretty much, I'm not getting those mixed messages, I'll revisit that theory, that position. But I'm not there yet. I think we still are vulnerable. And, it's hard to think bearish thoughts on a day like today. But let's face it, if we had a really bad day tomorrow, all of a sudden everything be dampened and everybody start getting more neutral. So at this point, looking at the sentiment for the RIDEX assets, that's what we have here. This is one of the cool things that Decision Point does, I think. And we track, back in the day, there was RIDEX handled these index funds. And while they still exist, Guggenheim has taken those over and they do manage them now. But we've kept the name RIDEX. And the point is that RIDEX had a basket of bear funds, and they had a basket of bull funds and sector funds. And then they also track the assets of the money market funds. So what we decided to do was to take the bear index funds plus the money market, because typically, well, if you're in a bear fund, you're feeling bearish. If you're in a money market fund, you're feeling neutral to bearish. So we add those all together, and then we divide it by the bull assets total. And that gives us the RIDEX ratio. So when I look at the ratio, and actually I will give Greg Schnell some kudos. He pointed out to me when I was looking at this sentiment chart, this rising bottoms trend line that we were seeing on the RIDEX ratio and how it had been broken down from. So we had that first little breakdown on that ratio. Obviously, it wasn't too much of a problem here, but we started to get another one below that rising bottoms trend line. I think that was another caution flag. The ratio took off, and we ended up a saturation point for bulls, and exhaustion appeared, and now we're seeing the ratio fall back down. I put in this, I guess you could call it sort of a support resistance line, to show you that previously, and what we look for typically, the normal range for this ratio is right here. I couldn't give you the exact numbers, but clearly you can see that that's what has formed right here. And we went above that and stayed above that with the ratio during that parabolic rally. And again, anytime I start seeing parabolas, I start to get worried. This was a pretty good warning sign. I had some warning signs on my short-term indicators for that. But right now, I'm seeing that we hit that saturation point. We're kind of moving back down on that ratio. Typically, when we start getting these tops on the ratio, it's not good for the market. We see a decline or we see consolidation, depending on the strength of what's going on. So anyway, I just wanted to point out that as far as the ratio is concerned, I think it's also neutral. It's pushing for some consolidation. If you look at what's going on in the funds individually, you can see definitely that the bearish feeling sentiment out there is increasing, because we're getting an increase in the assets for the bear funds. And so that does tell you that, money is moving that direction. Money markets are rather flat, trending slightly downward, but mostly flat. Tells me people aren't pulling cash out to go invest. They're keeping things the way it is. And that also tells me they're not particularly bullish or bearish. They're sitting in neutral. If you're sitting in cash, it's a neutral position. The interesting thing is we had that increase in the bear funds, pretty stagnant on money market funds, but we also stagnated on the bull and sector funds. So we didn't lose that bullishness to a great degree, because we're still seeing the same amount of assets mostly in those funds. We didn't see an exodus out of the bull funds. So I'm looking at this again. I see this as a lot of neutrality, but maybe in this case, because of the top here of the ratio, somewhat bearish, because people are getting bearish, but we're not seeing the saturation of bears where we would get all the way down here with the ratio. That's what we're looking for right now. I think everything's still sort of sitting in that neutral to bearish position. So with that, let me go through what I concluded about this, and then I'm going to talk to you about the poll we have running right now. If you haven't taken it, click the tab in the chat function, the chat window, polls, and take that poll. Currently, so the put call ratio to me, we're getting those negative divergences, and that typically is going to be neutral to bearish for the market from what I've researched. The AAII, individual investors out there, are very neutral. Same amount of votes for bulls and bears. So I would say that's a neutral position. The active money managers they've pulled back their exposure, but only slightly. And the reading is very average. So I would say that's neutral as well. The RIODX ratio, we're seeing that resurgence in the bear funds. But we're flat on bull funds and cash. So to me, mostly neutral. I should have put mostly neutral, but you could say that it's somewhat bullish, mainly because you're getting that increase in the bear funds. But the fact that everything else is flat, that's why it's leaving me more in the neutral position. I think there's still a lot of mixed messages. So at this point, I think there was a slight increase with bearish sentiment, but really when you looked at those charts with me, we're really seeing a lot of neutrality as far as sentiment. And I think, again, when you see neutrals, when you see indecision, that's when you should just err on the side of caution. It can't do you any harm, really. And yes, maybe you'll miss out on a little bit of profit. Maybe you'll get stopped out. But if we're switching, that's great. All right, so the question is, and Tom, you've got to answer this as well, how will the market close next week? As far as all of you, and again, if you go to that polls tab, you can add your vote right now. You can see it's going up as we speak. Clearly, people are believing that we will close higher next week. And, given this really nice Friday, I can see that. I'll tell you that I went into the about the same category. That was my vote. What was your vote, Tom, or have you made your...
I did not vote, but my vote is higher.
Okay. Going with the majority here. So if we're talking sentiment, guys, sentiment is contrarian. So if we get a preponderance of bulls, that could mean that we are going to actually close lower next week. So we'll have to see what ends up happening. I think it's always interesting to see the shorter term polls like this, I think tend to be more accurate as far as not the contrarian, more of, yes, that's really what people are feeling. And since it's such a short time frame, rather than being contrarian, it typically is not. Before we go, though, can I show my VIX chart? I know we're getting to the very, very end. I'm just going to show it really quick because I think it's important to see, because you were talking about the VIX, and the VIX is, I consider, short-term contrarian. And I think it's interesting right now when I look at this, because we're finally starting to see the VIX come up here to push through that upper Bollinger Band. And that indeed would be considered, honestly, that would be considered bearish for the market. You want to look for it to retreat. So I thought that was interesting to see these low readings. People are getting very bullish, which is not always good for the market. So that's just a different take.
Yeah, we shall see. I think the fact that VIX is moving down for me is very bullish, because
I'd say intermediate term, that's true. But when I look in the very, very short term, typically these punctures end up with the opposite occurring over the next day or two. So I'm talking really, really short term. But I agree with you. You really do need a low VIX, as we saw through all of this 2017, the last, the beginning of this last year. We were in those low readings, and that's what we wanted. And you can see what happened.
Mm-hmm. No doubt. No doubt.
let's close this thing out. I guess we'll look at the upcoming week. It's going to be a great one. You're going to want to stick around for that. Everything stock charts we'll have on Tuesday, tips and tricks. Greg Morris, author of Dancing with the Trend and a regular blogger here at Stock Charts, will join us on Wednesday as a special guest. And Thursday, we are bringing back Julius de Kempener, and he is the creator of RRG, and he will give us some more tips and pointers on how to use RRG. Finally, Friday, I'm going to be doing my workshop. I would love to get your suggestions for what you would like to hear from me in the survey. And I know you can find that survey just under this viewing window.
Yep, and it was great this week having Martin Pring and Greg Schnell with us, and Tushar Shande was with us yesterday. A star-studded lineup last week. We got another one next week, so make sure you stick with us. I do want to thank everybody for joining us today. Remember to complete that survey that Erin was just mentioning as you exit. She'd love to get some topic suggestions for her workshop next week. And of course, we'd love to hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe, and we'll see you back here on Monday. Happy trading.